almost $2 trillion in cash. That is what is estimated to be sitting on corporate balance sheets as companies wait out both the economic and political uncertainty. Talk about stimulus. Could unleashing this cash be the answer to economic recovery rather than waiting for the government to go even deeper into debt using your tax dollars to not build roads? Joining us now is David Rehr. That's pessimistic. I shouldn't have said that. Businesses and management professor at George Washington University, and Ken Ducey, CEO of Fairfield Capital. We also have Rick Santelli with us as well. I mean, this could be a lot of stimulus. What do you think would be the best use of corporations' money, of this $2 trillion, to get the economy rolling in? Is it spending money on equipment, which is what we're obviously trying to incent with this latest tax plan? Or is there something that would be even more helpful to the economy? Ken, let me start with you.
Yeah, sure, Dick. And we obviously deal with a lot of smaller companies. And as you said, uncertainty right now is the word of the day. Nobody knows what is going to happen. And that is what is right now have everybody frozen in their tracks. The best news would be that they're going to continue just doing what they're doing. Nothing's going to change over the next 12 to 24 months. And then companies will know what the plan is. They'll know what the
yeah, but what would be best for the economy? I mean, should they hire people with that money? Should they acquire other companies? Like, what would provide the biggest bang for the buck if we're looking at corporations and this money as this stimulus that could be unleashed?
Yeah, they absolutely will. They want to hire people. They want to grow their companies. The problem is they just don't know what the playing field's going to look like in 6 months. And that's what's freezing them. So when you talk about the money, when you talk about stimulating the economies, it's going to come from these smaller privately held companies, a lot of it, and they don't know what to do. They don't know what to invest in. They don't know if they should be hiring or not hiring because they just don't know what the landscape's going to look like. And it's a lot of it just because of these different plans and bills.
Let me just quickly ask you, I mean, you look at what the administration is proposing right here in terms of the tax benefits of investing in business equipment, but does that actually translate into demand, which is essentially what we need to have in order to get this economy rolling again?
Right. I think it does a little bit, but more importantly, to pay for those tax cuts, they're going to raise taxes on small business people, between 45 and 65% of them in America, which means they're infusing money into the economy, but they're also taking money out of the productive sector, which is a very bad idea.
Well, David, you may or may not be right, but as you know, there's a regularly scheduled election November 2nd, which probably substantially increases the idea of holding tax rates where they are presently. And I just want to ask you, if it pays to invest more after tax, then why wouldn't these businesses invest more if Trish's corporate tax cuts, a.k.a., let's say 100% expensing, if that stuff actually goes through, wouldn't that unlock and maybe unleash all this corporate cash?
Well, Larry, I think it'll unlock it. Corporations for the last 20 years have been saving more cash. We have the most cash ever since 1952 in corporate America. But I still think, even with an extension of the Bush tax cut, keeping tax rates low, the administration's kind of perceived attack on free enterprise in the markets makes people hesitant to invest long term, and that's precisely what we need corporations to do.
Rick, put your economist hat on. I mean, if we were to take this money off corporate balance sheets, what would provide the most bang for the buck? Where should it go?
Well, I think it should go in all the traditional avenues of any business in terms of expansion. But I think that what's inhibiting this is the dues. DOS. The D, of course, is demand. We're not sure about the demand because it's highly correlated with employment. O is opportunity. There needs to be an opportunity in your business to have a good rate of return. And maybe the S is the most important. Simplification. You know, whether it's regs, health care, the tax codes. Listen, all these credits, when they expire, when they don't, when the rate moves, when it doesn't. This is like a third world country. We need to have stability, a long-term outlook on the regulation and the tax code. And if you get those dues in order, the money will flow.
Okay, Ken, what about some shock therapy? Look back to Margaret Thatcher. Look back to Ronald Reagan. Tax cuts that really, really effectively shocked the economy into moving forward. They were, of course, trying to fight some inflation issues. Here we're trying to get demand going. If you cut taxes for corporations across the board, might that provide the incentive to get out there and hire?
Absolutely, absolutely. And as you said, two words. I mean, one is across the board. The other one is to make it a long term. Nobody wants a short-term tax break that they don't know what the environment's going to look like when that tax cut expires. They want to know that this is going to be something that's going to be in there for the long term so that they can then plan accordingly. They can hire somebody that they know is going to be around and be able to work for a long time, not not somebody that, hey, well, we're going to see this short-term stimulus, but then at the end, have it that we don't know whether or not we're going to be keeping them or not. And again, it all comes down to that certainty level, which is that they want to be able to plan out. They're very smart. People know how to grow their businesses. They want to grow their businesses. They just don't know if there's going to be this huge behemoth government coming in and changing the marketplace in 6 months or 8 months from now.
David Ray, the behemoth government, I'm worried about the behemoth government too. But what about the economy? I think we're passing a little hurdle here. There is no double-dip recession. I think that's what the jobs report show, the IMF report shows, maybe today's jobless claims. I don't know what that stuff means. I mean, businesses are sensitive to the economy apart from politics. What if the economy turns out better? Might we be surprised at capital investment with all this cash on hand?
Right. Well, the most of the money now is sitting in demand deposits, money markets, T-bills. They're not getting a great return like they could if they put it into real things. So I think, once the spark goes, the money's going to be unleashed into the economy. But the problem is some people keep kind of putting water on the spark.
Right. They
and
want
that
to
creates
invest.
Uncertainty, and people are holding back.
Do we run the risk, Rick Santelli, that the administration's proposal for this tax benefit to capital investment actually creates a scenario a la cash for clunkers or the real estate situation where people run out and they invest, and then you have a hold on it afterwards because there's no need for it? I mean, is it artificial demand?
Absolutely. It seems as though the government has this notion that it's the funding process. Well, they're affecting every aspect of the funding process. The $2 trillion says it's not really a funding issue. The problem is getting the money to move where it should. Well, if the government's going to subsidize interest rates, if you're in the lending business, you can't compete. It just goes right down the line. So what the government needs to do is realize that maybe we can't do mortgage business at 4% from the banking side, but maybe the true cost of business is 7%, and be grown-ups about it and let the chips fall where they may and let rates move where they will. In the long run, it will spark a lot of activity that would be good for the economy.
Oh, that's like saying the government should get out of the housing market. That's just crazy talk, Rick Santelli. Crazy talk.
And of course, you know that. That is exactly right, Melissa Francis.
They should stop picking
get out of the housing market. But Rick Santelli, where's all this corporate bond record refinancing going? Where's that cash going, Rick?
Well, it's going to add to the hoarding. It's going to probably put money in some overseas businesses where maybe the landscape is a little more simple to interpret. But at the end of the day, the assumption here may be wrong. The assumption is corporations are rushing because interest rates are low and they're going to change. Maybe low interest rates and a mediocre global economic outlook is going to keep interest rates low for a lot longer than we think.
Well, we're also...
I'm sorry, we got to leave it there.
Okay.
Thanks to all three of you for joining us. We appreciate it.
Thank you.
I wasn't advocating that.
That was what your whole
sounds like that's what Rick Santelli was saying.
That's one of my 12
That's what I was going to say. Wasn't that your whole show last night?
That was my whole show. Get government out. A lot of things, but housing in particular.
Fannie and Freddie.
Thank you.
Okay.